African economy endured quite a bumpy ride in 2022. South Africans saw consecutive interest rates hikes, high inflation and record fuel price increases. There was some good news though, with higher than expected growth and job numbers. So what does 2023 then have in store for all of us? Econometrix chief economist, that's Dr. Azar, Jammine, joins us now to look into this crystal ball and tell us, of course, what to expect in this new year. Dr. Azar, thank you so much for your time. Good morning and Happy New Year once again to you. But let's talk about it. I mean, the concern being how our economic outlook is looking for the year 2023. Perhaps starting with the Rand. How's the Rand performing?
The Rand weakened considerably in between September and November, going to a low point of 18 Rand 50 or so to the dollar, but has since recovered and is currently just below 17 Rand to the dollar. And this is linked largely to what has been happening internationally, where earlier, a couple of months ago, people were fearing the worst in terms of the need for international central banks to raise interest rates in order to quell the inflationary forces that have emerged out of COVID-19 disruptions to supply chains and high levels of demand as the world has returned to a semblance of normality after COVID. That on the one hand, but on the other side, what we have seen in the last month or 6 weeks or so is a bit of a reversal in that expectation. People are suddenly scared that if interest rates should be raised too far, the world economy will go into a severe recession. And so that in turn has led to expectations that interest rates may not, after all, have to rise that far. What has caused is the dollar, which was extremely strong a few months ago, has lost some of its luster in the last 6 weeks, and the Rand has benefited against the dollar specifically. On the other hand, the Rand has lost value against the likes of the euro and the pound. With the euro, we were at 16.5, 17 Rand to the dollar a few months ago, when the euro was very weak against a very strong dollar, rampant dollar. But since then, the Rand has depreciated to just over 18 Rand to the euro. So you can see it's a bit of a mixed bag, but generally speaking, the currency has stopped depreciating in recent weeks and months on expectations that maybe the world economy will not be subjected to quite as sharp an increase in interest rates as had been expected.
Yeah, and Doc, I suppose speaking into interest rates, let's look ahead to the next repo rate hike. How's that looking like for this year?
Unfortunately, the reality is that the U.S. Federal Reserve Board has carried on increasing interest rates in the last, certainly did so again in December by 0.5%, and that puts pressure on the South African Reserve Bank to follow suit at its January Monetary Policy Committee meeting. And so we do expect a further increase in interest rates, notwithstanding the fact that our domestic inflation rate has fallen a little more than anticipated, down to 7.4%, and is set to fall still further over the next couple of months in light of the decrease in fuel prices that will come into effect on Wednesday morning. Notwithstanding that, the impact of America raising rates and Europe following suit, Britain following suit, is that the Reserve Bank will probably raise the repo rate by another either 25 basis points or 50 basis points, depending on what happens between now and the next 3 weeks. The good news is that beyond that, we may not need to see any further interest rate hikes. And in fact, there were some who believe that towards the end of the year, the Reserve Bank might find its way possible to reduce interest rates.
Oh, that would be some good news. That would be a good way to get into 2024. But before I let you go then, what would you rate some of the biggest threats to the South African economy and also their impact on our food and fuel prices?
Well, number one, without a doubt at all, is load shedding. I think it's in a way very scary to consider that in the middle of public holidays of the kind that we've had in the last week or two, we've had to carry on load shedding when you would have thought that demand for electricity from mining, manufacturing, construction would have collapsed completely. And despite that, we have found it necessary to carry on load shedding. And that could work through the system in a big way, reducing economic growth, that in turn putting downward pressure on the rand, which in turn would keep inflation higher than otherwise could have been hoped for. And that in turn, it's a vicious circle where growth could be impeded by that. That's the number one. The number two threat is obviously from the international economy. As I mentioned, if this rise in interest rates that we've been seeing does have a very negative impact on global economic activity that will impact negatively on our exports.
Right.
Number three, and this is very uncertain, is China and the impact. You've covered it in the thing a little earlier, the impact of lifting COVID-19 restrictions there could be a very positive development, but it could also be very negative if they find it very difficult to clamp down on the spread of COVID in that country.
Well, Doc, I appreciate you speaking to us about this. Definitely one for all of us as South Africans to take note of, the impact of load shedding, the repo rate hike we've just discussed, but also China, as you mentioned. Well, could either fall as a negative for the country and our economy, or there might be, of course, some positives out of it. Dr. Azar, Jammine, thank you so much for always making time for us right here on the South African Morning.